With Bitcoin rallying up to over $43,000, did you ride that pony all the way up there? And did you make massive gains? Let me know in the comments down below. Today, we are going to be jumping down into the technical analysis on Bitcoin, taking a look at the 1 hour, 1 day, and 1 week's timeframes, sharing my thoughts and opinions on where I think Bitcoin is heading next. Let's waste no more time. Let's roll that intro and jump right down into it. Okay guys, so here we have Bitcoin paired up with USDT. We are of course on the Binance chart as our data source, and you can see here this move to the upside where we kind of tapped into over $43,000. So let's go ahead and just take a look and review where that sits right here at $43,475.20 on the Binance chart. Now the interesting thing about this particular structure here is I do not think it is over just yet. It is potentially getting close to it though. We are looking at this as still corrective. So I'm going to show you what that looks like. Let me go ahead and first of all just remove a few of these horizontal lines just so that we can kind of clear out the chart and the noise a little bit, because we have now got confirmation of the direction, which is exactly what we were talking about yesterday, i.e. we're looking for a breakout or a breakdown. We got the break up, which is good because we did rally up higher than $42,550. So here we can see we have a three-wave pattern, but if we actually measure the distance on this, it actually morphs outside of a three-wave structure. So here you can see it rallied up higher than the 1.382, but we're not yet on that 1.618 to make it a five-wave structure. So to me, this looks like we had a pretty decent correction here, and we are to be looking at this and to think of this as a corrective pattern at the moment. Okay, I do think we still can push up a little bit more to the upside. I don't think we're necessarily done just yet, so we'll keep a close eye on that. We may see another resurgence back to the upside. We'll see how that kind of plays out. Ultimately, our swing high for a really big breakout will be 44,700. If we stay below there, then of course, we are still in our bearish structure. Okay, so from smart money concepts, we are in a bearish structure. That was indicated here with a change of characterization within the charts. That hasn't got a confirmation. We haven't seen a break of structure to confirm that we are in fact bearish, but it is an indication that things are starting to turn. We can also so that there's no indication of a change of characterization back into a bullish state of play either, basically indicating to us that we are still in this bearish state of play at the moment from a smart money concepts point of view. We've rallied up higher and we've taken out the fair value gap from yesterday. Again, this is something that we were talking about, so if you didn't check out yesterday's video, I do urge you guys to go over to the channel and check that one out, because we're talking about where price is potentially going. It was a little bit unclear on the smaller time frames, a little bit clearer on the large time frames, but ultimately we had the fair value gap and we've moved up towards it and through it. So that's looking good. So smart money concepts basically predicted out that we'd have that fair value gap and get filled. Now with fair value gaps, you can see we still got a couple more here. We obviously rallied up higher than equilibrium. Now equilibrium is an area that I thought was going to hold as our resistance, but we blasted all the way through it. Again, probably cascading effects with those liquidations as well. So basically, if there were a load of short positions and your stop losses were here, then chances are as price went up there, you had to buy Bitcoin, which fueled the move to the upside. So again, the cascading liquidations can really drive price to the upside as well. But we'll take a look at volume profiles in a moment. At the moment, we do find ourselves with a situation where we find a W, X, Y, potentially X right here, and then a Z wave. Okay, so it is a five-wave structural point, but not impulsive. So we don't have the five-wave counts that we would normally expect to see. So I think for the most part, that's where that one sits right now. There is, of course, the possibility that this does become impulsive through a diagonal at the beginning here, a little wave 2, big wave 3, down into a wave 4, and then we get that impulsive break. Now, if you do this, you're going to be above the $43,672 1.618 fib scale. That's basically what is going to convert this with a five-wave count internally. There you end up with a bigger wave 1, wave 2, wave 3, 4, and then 5. And then again, you'll be pushing up into those higher bounds once again. Now, if we do have this, it is going to raise lots of questions around what was happening on this side and what is going on over here. Because when we have five-wave counts, we need to consider the importance of those and where they sit. Five-wave movements like impulsive five-wave structures structures, they don't appear in isolation. They're always more than one of them. So it's important that we kind of make sure that we haven't miscalculated anything anywhere if we start to see impulsive 5-wave counts. So when we take a look at this, it's really not feasible for us to have a 5-wave count going down like this and then a 5-wave count going up like that. That would be very much not valid within Elliott wave theory. So we know that that would be an impossibility unless, of course, this was the end of a 5-wave move. So this coming down here is not a 5-wave structure in itself, but is more WXYXZ with 5-wave counts internally, and then we get an impulsive break. That would be the only way you could kind of explain that. Alternatively, you have this as a WXY with Z with obviously your 5-wave count going down. You can't have them side by side like this, so we'd have to kind of consider one of them being wrong, and we'll obviously have to see how that data kind of makes that picture a little bit clearer over time. Okay, so I'm going to remove that for now because it's not a guarantee that we are in a 5-wave move to the upside. The fair value gaps, as you see down here, are going to be interesting. Fair value gap right on equilibrium, and of course the 200 EMA, which is the white line, the 50 EMA, which is the red line, and the 50 SMA, that is the yellow line. Chances are we move down and we fill out that first value gap, looking for corrections here to kind of finish off right on that 200 EMA for support, and then from there we probably will be looking for another resurgence to the upside. Z waves do not have to breach that swing high. They can, but they don't have to. So if we are to be looking at this as W, X, Y, X, and Z, well, that Z wave can fall short of the double top situation. Typically, you would expect it to exceed, but it doesn't have to, just technically speaking, just so everyone is aware of that. So for the most part, that's kind of where your smart money concepts is sitting and your Elliott wave theory. Everything's looking likely to come down towards the 200 EMA here, with momentum indicator also indicating that that's likely to be the case, indicating that support will be found on 200 EMA after we grab that fair value gap, after we hit equilibrium. And it'll be a 3-wave count WXY on an Elliott wave theory. So all of those kind of analytical tools that we're using here, Elliott wave theory, smart money concepts, the EMAs, the SMAs, they're all kind of coming together to tell us that we're likely to find support very, very soon. And we'll probably have another bounce to the upside. So that's a positive to be thinking about. When we take a look at our stochastic RSI, you can see it's still got momentum to the downside. Take that off, throw in our divergence indicator. The RSI is actually really high. So we are going to be looking for a correction here on the RSI. There's no divergences though, so again the last one we saw was the hidden bearish divergence, and we saw this move to the downside. So again, if you're trading divergences, this is a fantastic way to kind of really keep an eye on the market on both the kind of hourly and the daily timeframes, depending on what you're looking for. From our volume profiles, as you can see here, volumes are significantly lower, and so what we want to kind of note here is that price has pushed upwards whilst volume has been dropping down. So again, we have divergence here in terms of price going up, volume going down. It's never a good sign that we see this. So again, it does to me feel like price is being pushed up through cascading liquidation events rather than through actual demand coming in here for BTC. And so you can see there's a little bit of an increase here in terms of volume, but it is a decrease on all the volume that you saw previously. This tells us that we are still bearish. There's more volume pushing the price of Bitcoin down than there is volume pushing the price of Bitcoin up. So just bear those things in mind as well. Okay, so there's a lot of things to kind of consider with all of that. So let's take this up into the daily. So following on from where we were yesterday, we think that we've now completed that first 5-wave move. I'm looking at this as a reversal at the moment. So I'm looking at this next move upwards here being our wave 2. We'll look for a wave 3 down, 4, and 5 because I do think that is the most likely scenario. In terms of retracement here, we do look for retracement between 50 and 88.2% on the wave 2 situation. Okay, so I'm going to go ahead and make this just a fraction bigger. And then I'm going to go and walk you through what those numbers are. So on the low side here, let me just move those over there so you can see them. On the low side, we have 42,401, and on the high side, 44,146. And this is where our wave 2 is likely to kind of finish out. Again, it should be a WXYXZ. It should not be a 5-wave move as in 1, 2, 3, 4, 5. It cannot be an impulsive break out to the upside here. Otherwise, we are not in a wave 2. A wave 2 cannot be an impulsive 5 wave. It has to be corrective. So we can talk about WXYXZ, we can talk about ABC, we can talk about WXY, but we cannot talk about impulsive moves within the wave 2. So if we do see a 5-wave structure finish here, it's got to either be a zigzag pattern or we've got something majorly wrong elsewhere. Okay, so we're looking for 42,401 to 44,146 on that wave 2 on the daily time frame. So I'll go ahead and remove the actually what I'm going to do is, before I do that, I'm going to actually go ahead and just make sure I get the coordinates correct here. So on the low side we are talking 42,401, and on the higher side we are talking 44,146. There we go. Now what I'll do is I'll get rid of the fibs so we can actually have our yellow box on the correct targets. Perfect. So if we do complete that structured move up there in a WXYXZ, the next move in my opinion will be a minimum of a 1-to-1 rather than a wave 3, because there are two scenarios that unfold. We end up with an ABC structure, and if I just go ahead and just put this approximately at like 44,000, or actually I'm going to go with 43,800. If that is the case, then we're going to aim for approximately here on the price chart 38,442 to 39,412. That's going to basically be our ABC variation of what could potentially unfold. Okay, it would look like this just here. Okay, and that there would then basically bring us down towards the 50 EMAs, 50 SMAs. If, of course, we exceed the 1.618 at 36,923, and it's a straight-ish drop to the downside, very little kind of waves internally in there, we end up with a wave 3 situation where we might bounce up, find resistance on the 50 EMA, 50 SMA, and then move on down more towards equilibrium. And it's a 5-wave drop that I think we are likely to see like this overall, just because of how overbought we are on the weekly, monthly timeframes. What we will do is we'll soon find out how this daily stochastic RSI is going to react as potential price either breaks out to the upside or breaks down here towards these lower targets. As you can see, we have the fair value gap between 35,735 and 37,653. This is the area that the first fair value gap I'm looking to kind of complete out. There are more obviously on the charts here as well. We've got a couple down here as well. So for the most part, I'm just going to be looking at this kind of breakdown from our expanding diagonal 5th wave high points, looking to come on down a little bit more. It is possible that, maybe this is a wave 4. We still have a resurgence to the upside, and maybe it's just a WX, Y, X, and Z that is going on in that kind of wave 1 that I've got drawn here. What we'll do is we'll note that if that is the possibility of what is occurring when price breaks above 44,700. So anything above 44,700 is basically going to confirm that we haven't yet finished that 5th wave movement to the upside, and we're not yet breaking down. But the breakdown, I think, is inevitable at some point. So we'll keep a close eye on that. Ultimately, if we do see that break and that resurgence to the upside, then the actual target for this is going to be between 45,827 and 47,713. So there is going to be that potential breakout situation where we will be monitoring those situations and where those prices are going. But for the most part, considering the data that's available to us right now at the point of recording this video, I am looking at this more as a breakdown rather than a breakout. The breakout obviously is limited in the amount of percentage points you're going to get there. It's going to be around that kind of 10%, whereas the breakdown is going to be the one that gets you the most in terms of like 15 or maybe even 20%. But ultimately, what we want to do here is we want to kind of make sure that we have proper risk management with our tools that we're using. So if we're going to go short, we're going to make sure that our stop loss is going to be nice and wide, and we are going to basically make sure that we are targeting out those lows. Likewise, if we do get a breakout, we want to be targeting, making sure that we enter our short in this breakout range with a stop loss that it gives us, again, a pretty decent risk reward ratio. If we're to try to go long here, it's going to be a little bit more difficult. What you would do here is you want to go long, you're going to go long, and you're going to put your stop loss below that wave 1 low point, and you're going to target out the profit areas here. But you'll note that this gives you a really low risk reward ratio because it isn't really a big move in this space. Ultimately, I think the most profit here is going to be made from shorting the market rather than going long on the market, but you are going to have to kind of be a little bit more patient with your entries, and you're going to make sure that you have plenty of stop loss, in my personal opinion. But I'm no financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. And obviously, you guys know the exchanges that I use. I am going to be using BitGet for shorting the market. I currently have a BitGet short on Bitcoin at the moment, and yeah, it is my go-to platform. Again, all the links are in the description below. If you haven't yet signed up, why not check it out? So that's the daily time frame, right? We can see here momentum is down at the low side. We'll see how that reacts. We got no divergences being indicated at the moment, but a really high RSI, and volume profiles obviously are very, very small at the moment, non-existent, as you can kind of see. If we zoom out far enough, you can see the earlier part of 2023 volumes were very, very high on Binance and also on many of these other exchanges like Bitstamp and so forth. Volume drops down to basically being non-existent, yet it still gets these moves to the upside. I spoke about this previously. I think this is all to do with, I want to use the word manipulation because I don't like that word, but I think what's essentially happening here is Bitcoin is being withdrawn from the exchanges. There's less Bitcoin for sale, and therefore ultimately the demand that is there is actually able to push price up higher because there's an imbalance in that supply, the demand. When we take a look at the on-chain analytics, you can see a lot of Bitcoin flowing away from the exchanges, even though there isn't a lot of demand. This imbalance essentially is what I believe is helping push the price to the upside, alongside things like the DXY and, of course, cascading liquidations as well. So there's a lot of reasons, probably a lot more simplistic ways of kind of explaining it, but I think there's a couple of things that are going on that's driving price here, even though there isn't really a lot of demand for Bitcoin, which we spoke about yesterday in terms of how the whale wallets are on the decline. Big, large institutional investors are not backing the Bitcoin price movement. We can see that they're actually whales that hold over 10,000 Bitcoin or more are down 8.7% in 2023. That means that they were offloading their Bitcoin during this rally to unsuspecting retail investors. If you didn't check that video out, you should probably check that one out. That was put out last night on the channel. You'll see it as a thumbnail with minus 8.7 on it. So let's go over into the weekly time frame. You find the parallel channel tested the upper area, looking for this retracement, heavily overbought on the stochastic RSI, guys. So we are looking for big corrections to the downside. We've been up here now since the 30th of October. Actually, it's more like the 23rd, but I'll call it the 30th to be nice and consistent. We are going to be looking for big corrections here on the weekly time frame and the monthly time frame. We are, of course, going to be testing out 36, 37 in my opinion. This is going to be the first area of support we're going to hope to find. After that, we are talking 30 to 31,000. That's going to be the second area of previous resistance that hopefully turns to support. If you lose that, which I suspect we might, then it's going to be 24 to 26,000. That's the next area of support that we saw previously. You lose that, and we are talking about 19,500 to 21,800. And again, this is the other previous area of support that we saw in 2023. So there's a lot of things to go on here. If we're to see that big correction that I suspect we are likely to, then I think we're fair play to see 24,000. And if we go even deeper to the typical kind of retracements that we see from an overbought monthly stochastic to an oversold monthly stochastic, then we are talking less than $20,000 for Bitcoin. That is going to be a big shocker for many retail investors who have been FOMOing into this move to the upside, but it's going to be a huge opportunity for those that want to build their positions even more. A lot of people like the CC community have been dollar cost averaging throughout 2022 into early 2023 and have continued to dollar cost average even into some of the most recent pulls to the downside. This next big opportunity is the second capitulation event that I think is required before we get into those parabolic moves for Bitcoin and for those altcoins, where we see very significant growth across the board. Think of this as the last opportunity if you haven't yet deployed your spare powder. Ultimately, I'm about 60 to 70% already in the market, and I just continue to add to my positions as we see these larger pullbacks. And that is the opportunity that I think is coming here next for Bitcoin. I'm going to wrap this video up right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.